What is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today, we're obviously talking about support.com. A lot of things went on today. I need to address some FUD. I need to address some haters. I need to do a lot of different things for this stock. There was a lot. I spent literally almost the entire day from 8 a.m. to maybe 7 p.m. researching this stock, getting to the bottom of this, figuring out every last drip of information on support.com. So this video might end up being like 30-40 minutes long, but we're gonna get to the bottom of this right here, right now. It's so late at night. You can probably tell from the background. It's already late. It's already dark out. I look better because the lighting is a lot better in this video than my videos during the day. However, whatever. Alright, so the first FUD that I need to address are the people in my comments section saying that support is done, that you have to move back into AMC or GME as those are the real plays. So, before we get into any of the analysis, I just need to wipe this off the table right now. Here we have the Short Squeeze Explorer. It gives you the short squeeze score on Fintel. You can see that number 1 and 2 at a 97 rating. So BBIG has a 97.78 rating. Support has a 97.01 rating. These two are 1 and 2 right now. And this is a pretty accurate representation of stocks that could actually go through a short squeeze. If we go and search AMC, you can see AMC is 186 on this list. If we go and search GME, GME is 231 on this list. Guys, GameStop and AMC are not good short squeeze candidates. I know that your favorite YouTuber probably says to take your profits and go back into AMC or GME, but there's an entire reason behind this, and I'm just going to debunk all this right now. I'm going to probably expose some people for using you guys for your views, but whatever, I don't care. If we go here, you can see this is Google Trends, all right? So we have Google Trends. We can see we have the ticker symbol support.com in the search term, and we've turned this on to YouTube search right here. You can see this is basically what's been happening. Towards the end of August, it became a huge thing. On August 27th, it was the whole thing of YouTube. Other people that weren't covering this thing since $8 per share like I was, they started making videos. It got a 100 out of 100 score on August 27th. Other people hopped on the bandwagon. They were trying to get views from you guys. Now you guys can kind of see that this has fallen off on the YouTube search. So I bet your favorite YouTubers aren't really making videos about support.com. But if we go and we look at AMC, for example, we search AMC, it's completely dominating support.com in terms of YouTube searches. So your favorite YouTuber, besides me, obviously, is probably talking about AMC because guess what? It gets them more views. If you get more views on YouTube, they're gonna put ads on their videos and they're gonna make more money. That's half the reason why these YouTubers are talking about AMC. I'm a YouTuber as well. I understand the whole algorithm thing. I understand that you make more money if you get more views. If people are searching for AMC all the time and you make videos on AMC all the time, people are going to watch your videos. Does that mean AMC is a good stock? No. Fintel is literally saying that AMC is over 100, like it's over a 100 rank on their short squeeze scores. So stop coming at me saying that AMC is the real play, because it is not. It has retail hype. It is a story stock. Just like Tesla is a story stock. That's exactly what AMC is. Number 1 and 2 on this list are support.com and BBIG. Those two plays actually have potential for a short squeeze. I'm not here to exploit you guys. I'm not here to make money off of your guys' views. I probably make maybe $5 an hour for all the research I put in, so you better like that video in return. But anyways, I'm just here to tell you guys the facts. I'm just here to bring you guys the plays. If you're gonna go in my comment section and say AMC or GME is a better play, you're just gonna get banned, because that's just misinformation. It's a story stock, and I'm glad I just got that out of the way. Rant over. Woo! Alright, I had to calm down there for a second. That rant got a little out of hand, but thank you guys for sticking through that. I do mean a lot of that. There are a lot of YouTubers out there that are literally using you guys for views, using you guys for clicks, using you guys for signing up for their affiliate links, and I just don't think that is the way to do this. There's a lot of sellouts here in the finance niche, and ultimately I think those YouTubers are going to see a huge decline over time as people become more educated about investing in the stock market. But anyways, I'm very excited to bring you guys this video. It's going to be a long one, like I said, but let's just get right into it. Alright, so here is support.com at $30.95 per share, down 13% on the day, 13.82%, and then 1.31% in after hours. Now guys, we were in on this stock at $8 per share. We're still up well over 250%, so I don't think anyone should be panicking, especially if you bought call options. You're well in the money at this point, and we're still that number 2 squeeze score on Fintel. Here's another article by the Motley Fool that just absolutely makes just throw this article away. Here's why support.com was down big today. They mentioned something about getting attention on Reddit and the Wall Street bets. And like, why are they saying this? We literally looked at our social media sentiment indicator, and this thing never even swept the top. The highest that it got was the other day. It got to 4th place on Reddit. So for them to say that it's a meme, it's not. It's a short squeeze. Anyways, guys, here is where it gets juicy. The Ortex data. I was literally on Ortex for maybe 6 hours today, looking at a bunch of different metrics, bunch of different statistics, and we're just gonna go over every last drop of these. So the first thing off the bat, you guys can see short interest is down 5.81% as of today. Short interest is down to 65.41%. So I cannot deny there has been short covering. Has every single short covered? I don't believe so, and I will explain this to you guys later, but there has definitely been some short covering, and we're going to be going over every single thing. I'm not going to sugarcoat it whatsoever, so just bear with me. So on today, we had 885,000 shares that were returned to us. Now, these returned shares, these can represent the shares that were covered on Friday. On Friday, August 27th, we saw support.com reach a peak of around $56.27. So it is no surprise that there was definitely some short covering on Friday as support reached a peak. Now on Monday in pre-market, we also saw this jump here. You see at 9:30 a.m. there was a huge jump from the previous day, which means that after hours in pre-market, there was definitely probably some extreme covering. I definitely do believe that on Monday morning, there was some short covering as well. So I do expect short interest to go down tomorrow, as well as that will be 2 days from Monday. And then ever since Monday, there's just been a slow decline. This is when retail really got out of it. They don't fully understand it. They haven't done the same analysis as I have, and it's literally just a representation, the slow decline of paper handlers getting out of this. Maybe their favorite YouTuber, besides for me, has said something like get into AMC stock, get into GameStop, when we already know exactly what's going on here with the views. And it really just comes to show everyone has an agenda, even YouTubers. YouTubers make money on YouTube. It gives them a certain agenda. You have to think behind that and see what exactly they're doing. There's definitely a lot of YouTubers that have a vested interest in some other stocks that I'm just going to leave it at that. But at the end of the day, the facts are the facts, and you can go to our Discord and see exactly what stocks I'm talking about in that Discord, and it's BBIG and support.com. Anyways, there was also a huge amount of borrowed shares today at 571,000 shares. The utilization rate has also dropped to 80%, as you guys can see right here. So as today was 2 days after Friday's trading date, where we saw the largest uptick in support.com, we can definitely see the first signs of a short squeeze occurring. But I can say with confidence that there is definitely some shorts that are still in this position. 80% utilization is nothing to be ignored. A 326% borrow rate, and we'll get back to this figure in a second, because there's also a lot of new shorts that are in support.com as well, because you guys can see 571,000 more shares were borrowed. And what these extra borrowed shares probably means is that it's either new money getting in and shorting at these elevated price levels, or some of the older shorts covering and re-shorting the stock. All right, so this metric that we're looking at right here on this chart is the average age on loan of returned shares. So As of about a week ago on August 24th, you can see right here that the average age on loan of returned shares was about 5 days. So that's likely that some of the newer shorts were getting squeezed out. We definitely did see a lot of upwards price action in those days. Not what we saw on Friday, but still definitely something to be reckoned with. Then it jumps up right here to 44 days. So this was the first sign of some shorts actually covering on Wednesday, August 25th. Then it comes back down again to 25 on the average age of return. And then as of Monday, August 30th, this would represent last Thursday, we got 47 days on loan was the average age of the shares that were returned. Now this right here, this orange line, these are the total amount of shares that were returned. So we can see that on Thursday, August 26th, about 59,000 shares were returned, and then it jumps up on Friday to about 358,000 shares returned. Then on Monday, we also got about 355,000 shares returned, and then today on Tuesday, we got 885,000 shares returned. I also expect not as high as 885,000 shares returned tomorrow, but a similar big number, probably 500,000 by the end of the day. So based off of my estimates of the current price action that we've seen in the past week, there has probably been about roughly 2.2 million shares returned as of today. And then if we add in tomorrow as well, that's probably about 2.6 or 2.7 million shares that have been returned of this short squeeze so far. Now, before this thing took off, the estimated short interest was about 7 million. And so this would represent less than 50% of shorts actually covering on support.com. So it is almost certainly clear that not every single short has been squeezed out. I cannot deny some shorts, a lot of shorts have been squeezed out. Those are facts. But not every single one has, and definitely over 50% are still short on this stock. All right, so here we have the box technique that I've talked about in different videos. As you guys can see, there is a lot more price action now where shorts could have shorted, and there's definitely proof that new shorts have entered in on support.com where they could have actually made some money. Now, it's a lot tougher of a call to just say plain and simple that shorts have made money in the green, shorts have lost money in the red, because, well, the cost to borrow is just so significantly high that even some of the shorts that are in the green could have actually lost money on support. And also, just because there is some price action where support shorts could have made money doesn't mean we should ignore this huge red amount of price action where shorts have been losing money, paying an absurdly high cost to borrow at 326%. Now again, not to expose your favorite YouTuber, but the short interest for AMC has a cost to borrow of 1.98%. It's so freaking cheap to short AMC. Any guy who is shorting AMC, they lose $2 for every $100 they put into it. Every 2 shares of AMC, they have to pay $2 per year. It's absurd. Every $100 of support that you're shorting, you have to pay $326 per year. $2 per year compared to $326 per year. On top of all this, from my calculations, less than 50% of shorts have actually covered on support.com. Not every single short that has shorted in the big red rectangle has covered. It's just not true. There's literally people that are so down bad on support, banking that this whole AMC story narrative blows up again and gives these YouTubers more views so that they can actually cover their position for a lower price. And just to show you guys how BS this whole AMC is the only short squeeze narrative is the fact that the cost to borrow right before the short squeeze went from 169% and now it's at literally 2%. And then again, addressing this green box here where the shorts could have potentially made money, they are still paying a 326 cost to borrow, meaning that any positive price action from this point forward would put the new shorts in a bad position. All right, again, so the price action where new shorts could have came in and potentially, keyword potentially, made money started on 8/12 27 all the way towards today. Today, they could have potentially made like a little bit of money, but it's still not a very significant amount as of today. But the other days, definitely, especially on Friday, if someone shorted on Friday, they could have definitely made some money. We can look at Ortex to estimate how many newly shorted people came into this stock in that price action. As you guys can see, this yellow line here represents on loan new shares. Now this figure is very, very different because the borrowed shares are reported by the exchange instantly, meaning that it updates each day, which means that we can get a more accurate estimate of how many new shorts have came in during that green rectangle. Return shares is completely different because when a short buys back the share, that trade takes 2 days to settle and return to the exchange. So there's a 2-day delay before it updates in Ortex. But these newly borrowed shares do not have that same delay, so we can get a very accurate estimate of when these newly shorted guys got into this stock. So right here on Friday, August 27th, you can see that there was 92,000 new shares that were on loan. And then on Monday, there was about 129,000 newly shorted shares. Then today, we saw a huge uptick in this at 571,000 newly shorted shares. And just to remind you, all these newly shorted shares are paying that 326% cost to borrow. So all those days combined add up to under 1 million shares shorted. And let's just give them the benefit of the doubt by 100% and say 2 million new people have come in and shorted this stock and have made money. They're in the green zone on this stock. Well, if you subtract 2 million from the estimated short interest of about 6 million, you're still left with 4 million shares that are shorted that are in this red zone. So the math checks out that even if we give this green range the benefit of the doubt by over 100%, there are still a majority of the shorts that are in this red zone. And from my personal opinion, I believe that probably 75% of shorts are probably still in this red zone. We gave them the benefit of the doubt by 100% and said it was 66% of the shorted shares are in the red zone, but I think it's more like 75% are in this red zone, because we gave the benefit of the doubt. So we just proved that majority of the shorts are still hurting in support.com, but we have not even talked about the failed to deliver crisis or the liquidity crisis that have been going on in support.com. So what exactly is a failure to deliver? A failure to deliver is when you short a stock. When you short a stock, you need to find a lender, someone who gives you that share so that you can throw it back on the market and sell it. So a failure to deliver is when you short a stock, but you don't actually get that lender. And if you don't ever deliver that share, that is a naked short sell, and that is literally illegal. Now, allowing for failure to deliver should be illegal anyways, but the SEC has a law where you have up to 30 days to find that share to borrow. So you're allowed to short the stock, not come up with the borrowed share, and it just shows up in the database as a failure to deliver. But if you do not deliver that share within 30 days, you pay an absolutely huge SEC fine. So in order to fulfill this obligation and not get fined, you have to actually get that share on the open market, which does make the price go up. Now, we don't have the failure to deliver because this is another delayed statistic like a lot of short interest data, but we can see what happened here at the end of July. There was 885,000 failure to delivers on July 30th, 655,000 on July 28th, 890,000 on July 27th, 896,000 on July 26th. And you guys can also see, it's kind of hard, but it's behind those yellow lines, is that these increases in failure to delivers coincided with an increase in share price. So we don't have that new failure to deliver data yet, but we can make an educated guess that with the increase in share price, there was definitely tons of failure to delivers. So that also means that these guys are going to have to deliver these shares within the next 30 days. So we predict that over in this range right here, there's probably a lot of failure to delivers, and they're going to have to deliver that shares, which means they have to get them on the open market, which would raise the price of support. From my experience, they don't exactly deliver these shares 30 days from the date that they were failed, but they'll do it anytime between 1 to 30 days after that failure to deliver. Now, the problem is that there's almost 1 million failure to delivers each day right here. You can only imagine what was going on in these past few few weeks. Well, at the same time, the float of support is only 9 million shares. And this brings us into the next point. That is the gamma squeeze that just happened this past week, which could explain a lot of the price action as well as a short squeeze. There's tons of shares that need to be delivered. A call option is an obligation to sell the shares at the strike price at a later date. So when there is a gamma squeeze and all of these call options are now in the money, the option holder at expiration date, so in this case, it's going to be September 17th. That's when all of these call options do expire. They're going to need to deliver these shares. So 1, failure to deliver. They're going to have to deliver shares. 2, people that sold call options, they're going to have to deliver shares. With a float of only 9 million shares, this is literally a micro float stock. There are not enough shares to deliver. And I just dare you guys right now, if you have call options that are in the money for support.com, just exercise them right now. Don't sell them. Literally exercise them before expiration. Please do it. That will help this thing out so amazingly. If you exercise your call options that are in the money right now, they can get away with the gamma squeeze if they don't have to actually deliver these shares. If they can push the price down of support.com to below a majority of these strike prices, they don't have the obligation to deliver you 100 shares per contract. But American call options, you can exercise them at any point. So if your call option is in the money right now, you could literally exercise them. And this would perpetuate the liquidity crisis. So we have 9 million shares. We have all of these shorts in the red zone that have to, probably about 75% of shorts that are in the red zone that will eventually have to cover their shares. Then on top of all that, we have all of these failure to delivers that will have to pay a huge fine if they don't deliver these shares. It's a recipe for disaster, and I literally see this stock exploding. Alright, so now I'm going to expose some of the manipulation tactics from hedge funds intraday to basically revert this stock, keep it from going up, and get some of the retail traders to FOMO out of it, to sell the stock, to start causing FUD and say it's over. So you can see after the insane run up, there was obviously a pullback. This happens on every run up. There's profit takers, etc. The hedge funds really didn't need to do much to get this to come down after it goes up so much, because there's just going to be natural selling once the RSI hits this absolutely insanely high range. But what I wanted to take a look at are these key inflection points. So you guys can see right here, this huge candle circled in blue. This coincides where when this MACD index right here was about to cross, there was about to be an inflection point. It was about to turn green, signaling a bullish trend in the MACD, but it coincides with an absolutely huge selling candle. Now this happens again right here. There could have been another point where this MACD turned into a bullish trend, and there's also some huge selling pressure, and this was in the after hours market. And then today right here, we also saw more selling pressure, and this also coincides with the lowest volume day that we've seen in the past few weeks. As you guys can see, almost every single day had more volume on support.com than today, and we saw the price decline over 14%. Now you guys probably noticed that I have this pennant pattern drawn on the chart as well. This is basically a pattern that most day traders were probably looking for to find a breakout on this stock. And hedge funds use all of these technical indicators to figure out how to flip and go the opposite way as expected, to basically get people that are in this stock to think it looks more bearish than bullish. So as you guys can see right here on this candlestick, there's probably someone with a short position that is literally trying their hardest to push this stock to close underneath this line to basically make people more bearish on the stock. And then on this next candle, this green candle right here, you can see that the wick extends back into that pennant zone, but it closes almost perfectly on the line. But you can see that every single other point right here on this candle, it found support on the line. On this candle, it found support on the line. Right here, it found support on the line. Another important thing to note is this huge volume spike we saw right here. This was on Monday, but it was met with a red candle in the end. And then you can see this wick extends all the way to the top, all the way to the resistance point. This volume right here is most likely tons and tons of short volume trying to get this to to stop from breaking out to the upside and use that as a resistance point. And then you can see right here after that, it was rejected 2 times again as soon as it met that upper side of the resistance. So technical analysis is always the last thing that I want to use. I want to look at the fundamentals way before I get into the technicals. But for an average retail trader, someone who is day trading, someone who is not educated on what is exactly going on, someone with a huge short position and who has the ability to manipulate a market is going to use those technical indicators to make something look bearish. They're going to hammer the shorts at the perfect time and use algorithms and whatnot, high frequency trading, to make something look bearish when in fact it should not be bearish. And this is exactly why I never use technical analysis to make decisions, is literally because there are people with vested interest making it go the other way when you're expecting it to go a different way. In my opinion, technical analysis is the perfect tool for hedge funds to use to hammer in short positions to make something look bearish when in fact it means absolutely nothing. It's just lines on a chart. So when it's all said and done, there are tons of reasons to continue to be bullish on support.com. We've basically proven that about 75% of shorts are still in the red zone. We've proven that the hedge funds have a vested interest in continuing to hammer the shorts, manipulate the day trading perspective of the technical analysis, that there are way more shares that need to be delivered through call options, failure to delivers, and short interest margin calls than shares outstanding in support. We've proven that most YouTubers are literally just trying to make money off of their YouTubers because AMC is a story stock that is searched way more than support.com, as evident in this chart. We have proved that some shorts have definitely covered, but definitely not all. More than 50% of shorts still have not covered. So with all that proof, I don't know why there's any FUD about support.com, but if you're just looking on the surface, you're not going to find this information. You have to be subscribed to my channel and like the video to find this information, because that's pretty much all I ask. I had a blast making this. This is going to be my longest video on this channel ever, but I just had to expose everyone. I had to expose the short sellers. I had to expose the hedge funds. I had to even expose YouTubers that literally have a vested interest in making you guys make bad financial decisions. I had to expose everyone. I'm not going to plug my affiliate links. I'm going to put like one ad on this video. I don't care about your money. I don't charge you guys for anything. The Discord below is free, where you get all of this information throughout the day as I'm discovering it. I don't want any of that from you. I just want you guys to enjoy the video and subscribe to the channel. So that's going to be about it for the video. I hope you guys have enjoyed. And one more thing I wanted to say before I close this thing off. This is not financial advice. This could definitely be manipulated to the downside. Just because I am bullish, just because I am seeing these things, doesn't mean that everyone is seeing it. So don't use money that you can't afford to lose to put into support.com. Again, it's not financial advice, but I've talked about it this entire video and you know exactly how I feel about this stock. So anyways guys, I hope you guys have enjoyed, and that's about it. Peace.